Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. IT is at the center of attention because much as people would want to write off the growth rates for this sector, it tends to bounce back. It's done that every single time in the last decade. And I know at the end of a quarter, it will be wrong to talk about decadal terms. But my conversation with Venu Lambu of Mindtree is not just, or is as much about how the quarter went by for them, as it is trying to take a peek into how FY22 and beyond could look for Mindtree as well as for the industry at large. He joins us right now from London. I'll call you Venu. Venu, good morning. Thank you so much for joining in today. And I hope all is safe.
Oh, thank you, Neeraj. It's my pleasure. Good to see you.
Likewise. Can we just start off with the near and now? What are the salient points of the quarter? And, as I had thought of, are there some really special things that stood out, which, when we look at the numbers optically through the press release or otherwise, miss out on what went about?
Yeah, sure. Firstly on the numbers side, the fact that this is the second consecutive quarter of 5% plus growth, is definitely a standout thing. So that essentially shows that our strategy is working and growth is sustainable. The second is on the margins, right? So we have been consistent in talking about 20+% at the EBITDA level, and we did deliver that. So that's the second one. The third one I would say is the way the geos have responded. Right. I mean, we saw a great growth in the continental Europe, UK, and Ireland region. We saw a great growth on the North America region. And even if I look at the sectors that we have, though we had the travel and hospitality sector is in the first line of impact because of this crisis, but we are seeing the green shoots. We saw a more than double-digit growth in our TTH sectors. RCM, the retail and CPG sector grew very well. I think it's been a very broad-based. The geos also started responding to a great growth strategy that we have. And it's really a happy quarter, I would say.
Yeah, I mean, it's been, as you said, happy 2 quarters. You've certainly picked up pace over the last 2. Is this much like a cricket innings wherein from over 15 and 16 in a 2020 match, if it picks up pace, then it typically lasts well into the end overs as well? Do you see this spillover into the first, second quarters of FY22 or maybe arguably FY22 itself? That's part one of my question, simply because while you've guided to a double-digit growth in FY22, double-digit is from 10 to 99. So can you give us some color around how do you expect the near term and the medium term to be like?
No, absolutely. Look, I think this is, using the cricket analogy, this is a steady state performance, right? So this is a very steady opening or middle innings, whichever way you look at it, it is a steady one. So which essentially means that we are confident of a continued growth momentum over the next subsequent quarters, and that is the reason why we did guide double-digit growth. I agree, double-digit is fairly wide range, but we have refrained from giving specifics in terms of percentages. But I can only tell you that our pipeline remains strong. Our order booking has been 20% high, sequentially highest, and 12% on a year-on-year basis. This is outside of some of the contracts that got cancelled because of the COVID in travel and hospitality sector. So this is the net of increase, right? So that means you can look at the incremental order book that we've added, which is significant, right? So hence, if I look at all that, I'm extremely confident what's going to come over the next few quarters in FY22. Look, double digit, just wait for a few quarters to see how, what range the double digit would look like. But as I said, our strategy is working. All the talent that we got in, has started kicking in. Our investments in geos like Europe has started really yielding result. Really look forward for an exciting few quarters, in FY22.
Okay, and you reckon this growth can come in with maintaining or improving the operational metrics? You have, of course, guided to a particular number for the year at large, but my question is only that with all the pressures surrounding wages, etc., you reckon that that's the bare minimum, or is that a realistic number, or as I said, is the bare minimum and maybe you could even beat that?
Well, look, given some uncertainties on the costs side, there's a talent shortage, right? There's a talent war out there in the market. Plus, there are a different cost level for some niche skill sets and so on. So I wouldn't really want to put, a too forward step in terms of increment on that at this stage. But what I'm extremely confident about is that as a team, we will continue to improve our operational metrics, and we will stick to our commitment of delivering 20% plus EBITDA for FY22 in spite of this growth.
Hmm. Actually, can you dwell a bit upon this attrition debate? And I mean, okay, let me not call it a debate, but let's say mixed or conflicting signals, right? I mean, 3 or 4 companies have come out thus far. The first one that came out, exceptional attrition numbers. Then the second one really zoomed on the negative side on the attrition space. For you, it's actually fallen quite a bit. How is it looking for you? And how do you think it's looking for the industry? I mean, of course, it's great for Naukri.com, but
Yeah.
what about the IT companies?
Look, I think as the technology becomes a mainstream for every business, whether you're in the healthcare, BFSI, retail, and CPG business, technology talent is no more limited only to the IT industry as such, right? So it is a talent that is pretty much core to every business that operates in, right? And that itself makes the field of play much larger for a talent, and thereby it does put the pressure on the attrition for the industry, right? But I think the IT industry, has gone through these phases. Even during the .com days, if you actually look at it, there was a significant talent for certain skill sets because there were many more hirings that was happening across startups and so on. So things. I think the ecosystem will balance by itself in due course. There are very institutionalized practices of talent retention, which companies like Mindtree has it, and which I'm very proud of. And these things will play back in the long run when it comes to retaining the talent. And those things also will become very sticky for the talent to hang on to and build a career from the long-term perspective. I think I'm not trying to undermine the challenge of attrition that the industry has. It is, but at the same time, there is significant demand too across the industry. But I think the industry is pretty much equipped with some of the the best retention strategies and building a very long-term career options for people who are within the organization. And there are a lot of things that we did within Mindtree over the last few quarters, and that's also one of the reasons why you saw our attrition rate actually going down.
Yeah, actually, that my other question is that would you kind of say or even urge analysts not to look at the attrition rates on a quarterly basis, because they could kind of wax and wane, so to say. I mean, it could be down or it could be up in one quarter and down the next, simply because somebody got the better of your employees at a particular time. At some point of time, you were able to retain. I mean, not just for you, for the industry. Would that be a prudent way, or not necessarily so?
Look, I think the quarterly is a very short time frame to be a leading indicator for any particular trend. Especially on the attrition aspect that we're talking here, right? So I would like to see an attrition percentage, how it is progressing during the course of the year. There are increment cycles that comes in, which has a certain influence, for the attrition across the industry. And there are some big, movements that would happen, let's say either on the startup area or in a specific technology skill sets and so on. So I wouldn't read too much into the quarterly attrition figures personally, right? It's you always take it quarter by quarter and then look at it overall year. I get it, but the way to look at it is that on a year-on-year basis, what has been the net addition and what has been the attrition vis-a-vis the growth that company has delivered. I think that sort of gives a very wholesome package view.
So you wouldn't be too happy with the 12.1 number, 1% number for Mindtree, or you would not be too worried about, hypothetically, if you are an Infosys person, that a 15% number on Infosys. It's a particular quarter and therefore doesn't determine what will happen over a period of 1 year or 2 years.
Well, I'm a Mindtree person, so I'll talk about Mindtree, point of view. So, with regard to the Mindtree attrition, look, we believe we can do better, right? And that's always been the endeavor, whether it is 12%, 10%. Our mindset should be, even 1% attrition is something we have to analyze. Why does people leave and go? And so and that's where we are at it. And we'll never take it as, okay, we are good with this, right? So that's really a wrong approach to take, in my view. So hence we always look at improving it, as we go along. But of course, there are some external factors that does influence, but we'll be at it.
Okay. Yeah, I mean, pardon me asking you about, I didn't want you to comment on another company. I was just saying that because one company had such a high number, you've had a decent number. So just trying to suppose the pain and pleasures of a single quarter.
Sure.
A bit on the vertical / geographies. Now, presumably NA did very well for you. but BFSI did not. Typically, BFSI tends to do, typically when NA does well, BFSI tends to come into the picture for Indian IT. So how do you look at both of these pieces for the year and how do you expect them to be like, if not for FY22 as a year, then for Q1 or Q2 or H1?
Right. Look, I think the BFSI has been an area where we're extremely conscious about delivering a significant growth, and hence there has been a lot of work behind the scenes, if I may say, over the last 12 months to actually transform that business, right? So when I mean transform that business, looking at our client profile mix, the kind of client profiles that we have in the BFSI sector. Second is, if I look at within the BFSI sector, insurance as a sector itself is undergoing significant stress because of all this crisis. So in terms of what solutions, what proposition we can take it, into them. The third is we've actually strengthened our go-to-market organization. We have invested significantly on the leadership and the client partners level, rejigged a good part of our coverage strategy, both in Europe and North America for BFSI. I do believe that, all the hard work that we did in FY21 with regard to the transformation of BFSI, I'm confident that in the subsequent quarters that we will announce, you should start seeing the results of the BFSI. So it's something, which I'm conscious about, that it has not delivered the way even we would have liked it. But good news is, the worst is behind us.
So one can safely assume that FY22 BFSI vertical performance would be remarkably different for Mindtree compared to the past couple of quarters.
Yes. That's our aim, and I'm confident with the kind of transformation we have done and outlook we have. We'll deliver positive result on BFSI.
Difficult to say that for TTH simply because of the way things are around the world.
Yeah, look, in TTH there are things beyond our control, right? Wow. Airlines have to sort of fly with its full capacity. Hotels should be fully occupied. The people should start traveling. Families should enjoy holidays. When all those things starts happening, I'm pretty sure the technology spend will increase, and thereby we benefit. But I think we're still a few quarters away before those things happen.
Yeah, safe assumption out there. Okay, can I ask you again? You could choose to answer it from a Mindtree perspective or the industry perspective, but there are people who are extremely gung ho on Indian IT. And they cite the various times or the number of times that Indian IT has been written off and how it's bounced back quite admirably. And you have to accept that. At the same time, when one looks at the slightly near term, while FY22 might be a double-digit growth for most companies, and almost all of your peers too have said that, it's come for most companies on the back of a fairly tepid FY21. And therefore, FY22 or FY20, the numbers are not all that great. In some cases, there's also a combination of organic and inorganic, which is leading them to post this growth numbers. So what's your sense about what's happening within the industry? Because, if we hear that the world is moving towards becoming more digital and therefore Indian IT is inevitable, when we hear that, it's not just the fact that Indian IT is inevitable, so to say, they're charting new areas of growth because consulting firms are not able to service clients, and therefore all those clients are also coming to Indian IT service vendors. Why is it that growth of FY22 and presumably FY23 over FY20 is not looking as robust?
Look, I think, if I talk from Mindtree's standpoint, right, I think the way we look at it is that all our sectors grew this year, barring TTH, right? Which was predominantly impacted by the crisis. If I look at our RCM and CMT, their growth, at least these two sectors' growth, were similar to what we would have anticipated even during the pre-COVID times, right? So hence I wouldn't attribute to the growth of these two sectors, which have actually grown on a year-on-year basis, related to anything to do with a short-term spike. So they are the spends that we would have anticipated anyways. Yes, there are a few things which got accelerated during this phase, right? The projects were brought in, whichever had a digital intervention, were brought in. So that's one statement, that we do believe that there are certain sectors and which will continue to have a sustainable growth. Now, if I look at what's happening in the industry, right, where is the dollar that's being spent? If you look at traditionally, we have moved the needle from IT being a sort of an enabler to the business, with technology being core to the business, right? when you say it's being core to the business, it has a bigger play in the business, right? It has a play beyond the cost. It has a bigger revenue play,
Yes.
right? And since the technology has a bigger play in terms of revenue enhancement, whether it is enhancing the customer experience, getting the data right, and getting different channel experiences for the consumers and bringing more analytics into the business, whichever way you look at it, there is a bigger revenue play. So, and what has been tapped in maximizing that value of revenue play, we are still at a very initial stages. If you look at it a cost play, I would say the cost play is fairly mature, right? Because companies have been doing cost play for many years, fairly mature. The growth is incremental, not really a step change, but the step change that you actually see is going to be the revenue play. Since we are at the beginning of that revenue play maximization, I'm extremely confident of growth of the industry. If you ask me in what span duration, that's very difficult to say, with all those uncertainties around, but it's difficult to say. But I wouldn't want to label this growth related to short-term spikes. These are genuine revenue play, strategies that are actually working for the industries.
Okay. I don't know if you can answer me, but I'm still trying my luck out here.
Sure.
And that is that while there are uncertainties around, there are, for example, other businesses which are not as mature as IT services, of course, but say, for example, specialty chemicals, wherein the companies are saying that they see multi-year double-digit growth possible for them. Now, I agree that the bases are much different compared to IT, but I'm asking you that if we say that the world is in a technology super cycle and Indian IT will benefit from it, surely industry captains can tell us if they believe that this is not just a one-year phenomenon. There's a high probability or a probability that there might be double-digit growth, not just for 1 year, but maybe a block of 5 years or a block of 3 years or a block of 10 years, whatever. I mean, there are analysts on the street who are saying this. I'm just waiting for an industry captain to say that. So I'm wondering if Venu Lambu is that industry captain who thinks that for Mindtree, the growth can be double-digit, not just for FY22, but possibly for a few years beyond.
Yeah, look, if you look at it from a technology trend standpoint, as I said, we are at the beginning of the maximizing the value zone of the revenue play. So hence, I'm optimistic that the role of technology in the revenue play will only continue to enhance. Now, excuse me. Now, when it comes to giving a specific guidance of double digit, X digit, and so on, so things, I think that's a slightly different topic, because that is sort of related to the budget cycles of the customers, and which countries and which economies will come back to a sort of a long range planning, which sectors will come to a mid range planning, and so on, so things. So if things were fairly in a certain state where you would know what's the budget cycle that our customers are planning, then you can take a punt of giving a certain guidance beyond 12 months. I don't think we are there yet on that, right? So hence it would be a bit unreal for me to call out anything beyond 12 months.
Fair call. And thanks for that very candid explanation as well. And thank you for giving us the time today to give us some sense of what Mindtree and the industry might be looking like. And we wish you all the best for the quarters and the year ahead.
Thank you, Neeraj. Great talking to you.
Likewise. And viewers, thanks for tuning into this edition of The Talking Point.